In February 2024, during a news interview, Kellogg's CEO Gary Pilnick announced that they were now advertising cereal for dinner.
When I say cereal, you say dinner. Cereal!
Dinner!
Cereal!
Dinner!
He claimed that it was a great affordable alternative to a regular meal for consumers who are under pressure.
I'm all for innovation and marketing, but the idea of having cereal for dinner, is there the potential for that to land the wrong way?
We don't think so. In fact, it's landing really well right now, Carl.
This interview received a ton of backlash, both in the news and online, and there are now tons of videos on TikTok calling for a boycott of Kellogg's products. There is also a website for the boycott called Let Them Eat Cereal, referring to Marie Antoinette's famous misquote, "Let them eat cake," during the French Revolution. People are angry at how out of touch Kellogg's and its CEO are and the nerve they have at advertising cereal for dinner, which is not known for its health credentials. And let's put aside the fact that Kellogg's had to settle a class action lawsuit for millions of dollars because it advertised its cereal as healthy when they contained lots of sugar.
Should we pay me to eat this shit?
People are also pissed off at the fact that Kellogg's has increased the price of its cereal by 17% in 2023. So not only are they advertising a not-so-nutritious product as a meal to people who can't afford a proper meal on a regular basis anymore, they've also made this option less affordable in the meantime. Because of its actions, Kellogg's is now the latest company to be accused of greedflation. This is a hot new business trend where companies raise the prices well beyond inflation to make more profit. This is an issue affecting many sectors, but when it comes to food, people really feel it and notice it more, because you have to buy food every week and you see how much the price of a weekly shop has gone up. But how did we get here? How did greedflation happen and why? And why does it happen so much when it comes to food? Let's look into it. For the past few years, the price of everything has skyrocketed around the world, with inflation rising and making existing and living much more expensive. It's been dubbed a cost of living crisis, which is a pretty bleak term. In the UK alone, the annual rate of inflation reached 11.1% in October 2022, a 41-year high, while absolute poverty has also been rising, with a quarter of children now living in absolute poverty. And these increases in poverty and cost of living have been attributed to many issues. First, it was the pandemic and its supply chain disruptions. Then the war in Ukraine, which increased gas and oil prices as well as grain prices. And there were headlines about prices going up to account for these disruptions, about companies making the difficult decision to raise prices. But while stories of rising prices and inflation coupled with rising poverty flooded the media, corporate profits also appeared to be at a record high. But how does this happen? How does a company make the difficult decision to raise prices for consumers while also announcing record profits shortly after? And the answer is greedflation. So while inflation is defined as the rate of increase in prices over a given period of time, usually caused by changes in supply and demand for goods and services, with greedflation, also known as seller inflation, the increase in prices is partially caused by companies wanting to simply increase their profits. They can do this by taking advantage of and hiding behind real inflation and supply chain issues and raising prices simply to benefit them. Already in 2022, there was evidence of greedflation happening, with a Guardian report analyzing Securities and Exchange Commission filings for 100 US corporations and finding net profits up by a median of 49%. And in the UK, the Workers' Union Unite published reports on corporate profiteering in both 2022 and 2023 and found that profits for the UK's 350 largest listed companies were 89% higher in the first half of 2022 than before the pandemic in the first half of 2019. These initial accusations of corporate profiteering were of course denied, with the Bank of England governor stating that there was no such evidence. This is the same guy who in 2022 told workers they should avoid asking for a pay rise or they would make inflation rates go even higher. There were also articles about how this is actually good, like greedflation is real and probably good for the economy in the Wall Street Journal, or an article in The Economist titled "Greedflation is a Nonsense Idea," where the author wrote, "The fact that companies raise their prices in response to shortages is not only defensible, but desirable. The alternative to letting the price mechanism bring supply and demand into line is to rely on something worse, such as rationing or queues." And this argument completely misses the point, because what this article and many others do is basically say inflation is good. They are completely disregarding the fact that it's not just inflation, but it's companies raising prices because they want more profit. But then the evidence just kept coming, to the point that the International Monetary Fund, the IMF, which is the United Nations Finance Agency, released figures on corporate profiteering. A June 2023 study found that in the Eurozone, increased profits accounted for 45% of price rises since the start of 2022. And just to clarify, the IMF, these are not the good guys. Just read the reviews on Google Maps to get a sense of what people around the world think of the organization. The IMF has been criticized for attaching very strict economic policy conditions to countries, mostly in the global south, for receiving debt relief loans. Conditions include austerity measures, privatizing industries, and slashing corporate taxes. We will do a video on the IMF because the impact of its loans and the conditions it attaches to them have had a significant effect on local economies, food cultures, diets, and health. Going back to greedflation, even economist Albert Edwards, who works for Société Générale, said he hadn't seen anything like it, stating, "After working in finance for over 40 years, I had felt there wasn't much that could surprise me. Yet, I find the unprecedented levels of corporate greedflation in this economic cycle astonishing." When it comes to food, Jennifer Clapp, professor at the School of Environment, Resources and Sustainability at the University of Waterloo in Canada and member of the International Panel of Experts on Sustainable Food Systems, found that greedflation was widespread across the entire food supply chain. For example, if you look at fertilizer companies, they tripled their prices in 2020 and 2022. And there is now evidence that they were increased well beyond what was needed to cover increased production costs. And these companies ended up making more profit while selling less product. Further up the chain, we have companies who sell and trade agricultural commodities, such as grains. The four global corporations that dominate commodities, ADM, Bunge, Cargill, and Louis Dreyfus, saw profits shoot up by 255%. Then, further up the chain, we have food manufacturers. Globally, the largest four food manufacturers saw a £16.5 billion increase in profits compared to pre-pandemic. And finally, we have supermarkets. In the US, the 2024 report, Grocery Supply Chain and the COVID-19 Pandemic by the Federal Trade Commission, found that food and beverage retailer revenues increased to more than 6% over the total cost in 2021. And in the first 3 quarters of 2023, retailer profits rose even more. Okay, so how did we get here? How are companies just allowed to profiteer in unison across the food supply chain? The reason is the financialisation of the food system. In Clapp and Isaacson's book, Speculative Harvests, the process of financialisation is defined as the process in which financial actors and financially driven motivations have taken a larger role in society across all sectors in the economy, and it indicates a shift in the creation of wealth away from productive industry and towards finance. When it comes to food, Clapp and Isaacson state that the financial transformation of the food system has taken 3 broad forms. 1. It is being reconfigured as a new arena for capital accumulation for financial actors. 2. It has been reshaped in ways that prioritize shareholder value. And 3. Financial motivations and mechanisms have been normalized as elements of everyday life. I would add that financial motivations and mechanisms haven't just been normalized but have become the driving force of our food system and are prioritized above health, nutrition, food security, affordability, sustainability, and human rights. One clear result of financialisation has been the increasing concentration in the food industry. In her paper on seller inflation during the pandemic, aka greedflation during the pandemic, economist Sarah Weber states, "Sellers' inflation is not possible in a perfectly competitive economy, but in a highly concentrated economy in which large firms are price makers, it is a real possibility." And our current food system is not competitive. At each step of the supply chain, power and market share are concentrated in the hands of just a few large international corporations that can dictate the price. The rest of us, the farmers, the workers, the consumers, are reduced to price takers and to basically having little say in how our food is made, under which environmental and ethical conditions, and ultimately how much it costs. This is why our food system is often represented as an hourglass. You have lots of producers at the bottom, growing and making all the food that we need, and you have all of the consumers at the top. But in the middle is a bottleneck, where just a small number of companies control how the system works and dictate the conditions and the cost and the prices. It wasn't always like this. In fact, concentration is a relatively new phenomenon, and it only started to increase around the 80s and the 90s. This was during a global political and economic environment that promoted trade liberalization and allowed foreign multinationals to come in, buy up companies, and create giant global corporations that ate up both national and global competition to increase their reach and profits. The end result is a concentrated global food system in which, for example, just 4 grain trading firms control 70% of the world's grain and oilseed trade, just 3 firms control 60% of the world's cocoa trade, 75% of the world's banana trade is controlled by 5 companies, and just 5 companies control 75% of the world's chocolate manufacturing. Similar concentration can be seen at other levels, such as agricultural inputs like fertilizer or seed, or at the supermarket level. This drive for concentration has been largely motivated by the drive to increase shareholder value, which is a key aspect of financialisation. Nowadays, many global food companies are publicly listed on the stock market and are owned by shareholders represented by large asset management firms. And like other financialized sectors in the economy, the primary function of food companies is to maximize shareholder value. And I do think more people are becoming more aware of how pervasive this priority in the economy is, because maximizing shareholder value has become a meme on social media, and on Etsy you can buy mugs and t-shirts about maximizing shareholder value. But to me, this seems like a coping strategy for the current work culture and the economy that we live in that puts growth and profit above all else, and how absurd it feels to give this priority over security, well-being, health, nutrition, community. But I digress. In the food industry, one way that companies have maximized shareholder value has been through mergers and acquisitions. This has been seen as a quick and almost guaranteed way to increase profits compared to investing in productive activities such as innovation and research and development. Using my previous example of concentration in the chocolate industry, the reason 75% of the world's chocolate manufacturing is controlled by just 5 companies is because of over 200 mergers and acquisitions between the 70s and the 90s. So here we are. Thanks to the financialization of food that prioritizes shareholder value at all costs, we now have a concentrated food industry that can raise prices because they can and want to, and in a way need to, because how else are they going to maximize shareholder value now? They've already done all the possible mergers and acquisitions, so now this is just the next frontier, just increasing prices to keep maximizing shareholder value. Another reason why greedflation was able to happen is because through financialization, food commodities have increasingly become a way to accumulate capital through speculation on the financial markets. Let me explain. So the same way that food company stocks are traded, so are food commodities such as wheat, soy, cocoa, and rice. These are traded in the form of future contracts or futures on the futures market. Futures are standardized contracts for the delivery of a commodity on a future date, but at a price set today. These contracts are intended to help buyers and sellers hedge the risk of buying and selling a commodity that is impacted by price fluctuations caused by market fundamentals. Market fundamentals are the issues that affect supply and demand, such as climate change, weather or disease that affect a crop, supply chain issues, or wars. Changes in market fundamentals can make the price of food commodities go up or down. So setting the price of a delivery of a commodity in a contract can protect those buying and selling. Although it could be that at any given time, one side makes a profit and the other makes a loss, depending on how the price fluctuates at the time of delivery. The trade and exchange of food commodities is nothing new. This has been happening for centuries. The Dutch were exchanging commodities on the Amsterdamse Beurs in the 16th century. Rice futures were traded in Japan's Dojima rice market in the 17th century. But since the end of the 19th century, the trade of food commodities has become increasingly financialized, with financial actors who have no commercial or material use for food commodities increasingly playing a role in determining the price of food through speculation. So what is speculation? According to Wikipedia, speculation is the purchase of an asset with the hope that it will become more valuable shortly. It's considered a high-risk purchase, where there could be considerable losses, but the potential for profit and increase in value are so big that it justifies it. In the food commodities futures market, speculators buy or sell depending on whether they think the price will go up or down, with the aim to maximize returns. I don't want to go into too much detail about the pros and cons of speculation because the whole thing is quite complicated and it needs its own video. But speculation in futures markets is not a new phenomenon. It was rampant during the American Civil War, with speculators driving up prices of wheat. Regulation was put in place in the 1920s and 30s to limit speculators' role in the futures markets to prevent price distortions and profiteering from speculators. However, in the 1980s, regulation was slowly rolled back through a series of exemptions that allowed more and more financial speculators. And this was followed by complete deregulation of the market in the 2000s. And now there was completely zero oversight. Speculation then rapidly increased. It became so prevalent that the actual buyers and sellers of the physical food commodities were outnumbered by financial speculators who didn't trade the actual commodity. In 2011, in some commodities markets, 60% of traders were financial speculators, compared to just 12% in 1996. Right now, it's more like 50-50, which is still pretty high. And there is now growing consensus that too many speculators and too much speculation on commodities futures can raise prices well beyond market fundamentals and lead to food price volatility. This becomes quite clear during a crisis. Speculators often rush to the market whenever there is one to try and maximize their profit. This happened back in 2008 during the financial crisis when food prices spiked. But a more recent example is the role speculators played in partly driving up food prices in 2022 following Russia's invasion of Ukraine. Shortly after the invasion, the price for oil, grains, and chemical fertilizer skyrocketed. And while price changes are expected as a result of a crisis or shortage, speculators on the financial market have now been accused of further driving up prices purely due to their speculation activities. Basically, a frenzy of speculators following each other's behavior, betting on rising prices, which then ended up in higher prices beyond supply and demand issues on the ground. As a result, the top 10 hedge funds made £1.5 billion profit from this food price spike. Olivier de Schutter, co-chair of the International Panel of Experts on Sustainable Food Systems and UN Special Rapporteur on Extreme Poverty and Human Rights, has said that while it's difficult to disentangle the impact of speculation from food prices that may have already been rising for other reasons, the hedge funds' herd-like behavior can corner markets, make upward price swings higher, and distort market prices. And this is inflaming price volatility of the food that we eat. Speculation has a wide-ranging impact on food systems, driving up the price of food imports, the price of manufacturing food products, and ultimately what people can afford to buy and eat. It also has an impact on farmers who are unable to plan their farming activities accurately because the prices are so volatile and don't really represent supply and demand anymore. So yes, prices didn't have to be that high. And all this has only been made possible by a financialized food system that has turned food markets into an arena for the accumulation of wealth by financial actors. To sum up, greedflation isn't an anomaly or an isolated event. It's just another symptom of the financialization of the food system. You cannot have greedflation without financialization. So to stop greedflation from happening, the financialization of food has to be reversed. These are big changes that require changing how the whole system works, so it can't happen overnight. But there are also limits that can be put in place to rebalance the system. One way would be to create more competition and less concentration. Breaking up companies and putting limits on mergers and acquisitions through better competition laws would prevent companies from having too much power in the market and dictating prices. Another thing we could do is put back restrictions on speculation on food commodities, meaning reinstating the stricter laws that we originally had that state who can and cannot speculate and how much, so that we can limit the ability of speculators to corner markets and profit from speculation. Or we could have new types of company ownership, so that we can remove the imperative of increasing shareholder value above all else. We could have new types of public ownership structures that could help align business decisions with the interest of consumers, farmers, food workers, and the environment. In the current discussion around greedflation and corporate profiteering, some have also called for a tax on excess profits beyond a certain amount. According to the IMF, the potential revenue from taxing excess profits globally could be 100 billion. This could help countries invest in public services such as healthcare, education, better infrastructure, and welfare. Clapp and Isaacson also suggest creating alternative food systems where small-scale farmers and distribution systems are supported through funding and by widening access to consumers. An example is the creation of community-funded farming schemes, where the community helps farmers with funding needed to grow food, while the community in return gets access to fresh fruit and vegetables grown locally. While solutions and alternatives emerge, I think it's also important that people learn how the food system works so that we can push for better regulation, find solutions, and create better food systems that work for all of us and not just investors and shareholders. I really love food, and my goal with this channel is to keep learning and sharing what I know about food systems and the issues that affect it and the possible solutions to make it better. So I hope you join me for the next one. Please like and subscribe if you enjoyed this video and leave a comment with your thoughts. Thanks for watching and see you next time.